in Asia right now, you're actually seeing a pretty mixed open.
Revenue growth of 15% is ahead of street expectations.
Crude collapses by another $40, then this tax would be removed.
The Nifty's opened at 18,280, just a gain, a slim gain of close to about 0.6%.
Irrational exuberance on the equity markets has been so high in this country.
IDA, under the leadership of the new chairman, had constituted multiple committees. We were leading one of those committees.
We are looking at an average trade deficit number in the subsequent 4 months to be around $21 billion.
There has been a bit of a pickup in the market. We're currently up close to about 67 points on the Nifty.
KFintech is a leading platform-based solution provider for the capital market space.
Phoenix Mills is in focus because the company has gone ahead and acquired a land in the city of Surat.
32 million people did tune into the app for watching, Messi versus Mbappe.
We're currently up close to about 90 points on the Nifty. The sensex has gained nearly 300 points.
Football final fatigue, right? Finals fatigue, maybe. I'm feeling it. I don't know if both of you are. You're with us here on Closing Bell. Nigel and Reem, of course, with me over the next 60 minutes. It's still Messi, Mbappe, and those, all of that still on, I think, a lot of people's minds, even as we track markets. Markets, by the way, not had a bad session at all. If you think about it, there was no dip. There was no dip at the open, but the market moved on nevertheless. Intraday, we've had dips. The first high for the day was made at about 1040, 1050. There was a sharp dip. Then the market rallied. The high for the day was made at about 1230 or so. Then there was another dip, and this is the third up move that we are seeing. And you can see that on the intraday graph. So almost 100 points is what you have. Asia was uniformly down, but Europe is not. Most of the European market indices are up between 0.5% and 1%. The market here is trading, more in tune with what Europe is doing rather than what Asia did earlier. Despite this bump, 100-point bump, the 20-day is still some distance away. The Nifty 20-day is at about 18,540, which is, I think, the short-term reversal level, above which I think some confidence will come back. The last I checked, almost 50 out of the 100 Nifty points are coming from four names: HDFC, Reliance, ITC, and Bharti. These are the four names contributing 50% of the gains. Bank Nifty, I think, has crawled up its way back above its respective 20-day. That stands at 43,274, but it's very close. Too close for comfort. Need to put some distance between the 20-day and where the price would be. Mid caps and small caps are doing okay. Nothing spectacular, but they're up 1/3%, 0.5%. And as a consequence, market breadth is pretty positive as well. Nigel, hi, afternoon.
Well, afternoon. Actually, intraday, the Nifty went down to around 18,245. And if you look at the 18,300 put, the premium out there is around 50 rupees. So instead of, seeing a slippy slide straight to around that 50 DMA, it appears that around that 18,250 odd, the bulls want to put in a bit of a fight. Going by today's intraday low and going by the writing, we're seen at around that 18,300 put. On the flip side, at higher call levels, we continue to see writing. Case in point being the 18,300 call and the 18,400 call, and that's been written for the last few days. So just keep an eye out on that front. The 18,300 call, well, the premium's around 150 rupees. So the first signs of resistance will come in at around 18,450. And then, as you mentioned, the 20 DMA, that's a good 80-90 points away from there on. So you have your 200-point band, basically 18,250 on the downside to around 18,450. A decisive break of either direction either takes us to the 20 DMA or around the 50 DMA on the downside. So let's see how things go from here. Rima.
Okay, and now let's tell our viewers what we lined up for them on Closing Bell today. The October TRAI data shows Reliance Jio has added the most number of subscribers for the 7th successive month. More details coming up on this. Jio Cinema releases viewership numbers for 2022 FIFA World Cup. A whopping 32 million people tuned in to watch the final match. More details lined up. We'll also put the spotlight on other media stocks with Karan Tarani of Elara Securities. And we'll be joined by our Alpha Manager for the day, Gopal Agrawal of HDFC Asset Management Company, to discuss his top portfolio bets.
All right, well, the markets are up closer on 100 points out. UTI, well, that's the stock that's really flying away. It's been building on to gains all through the day. So that's up closer around 15%. Suzlon Energy, one of those unlikely gainers. In the month of December itself, Suzlon is up roughly around, I think, closer around 25% on a low base. So keep an eye out on that one as well. But let's get you trades for the final hour of trade. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. What do you make of today's trading session? What are the levels you're tracking first on the Nifty? And then you could fill us in with your picks.
Good afternoon, Nigel. I think we maintained a mildly negative outlook on the Nifty, but the good thing is that it has recovered the 18,300 mark. The overall structure isn't yet convincing for me, so my idea is that there could be a pullback which could play out toward levels of 18,440, 450. And unless suddenly we start getting past that, the outlook will be negative. So selling around those levels could be a very profitable trade in case it works out. In case it doesn't, then the risk involved is very small. So we'll try to short it if we get another 50, 60 point up move and then take a stop loss of about 18,500 and hope that the low which was made today and day before, I think those levels 18,250 could be revisited, possibly be exceeded on the downside. So that's the kind of outlook we have. On the stock side, I have a buy on Britannia that's making a fresh high and giving a good breakout as well. Buy here with a stop below 44.90 for targets of 46.20. And Glenmark is a sell call with a stop at about levels of 419 for targets of 405.
Britannia and Glenmark, these are the two trading ideas by Mitesh. Let's talk about the telecom data. Now, TRAI has released the latest telecom subscriber data, and this is for the month of October. And here are the key takeaways. For the 7th consecutive month, Reliance Jio has added the most number of subscribers. In October, Jio has added nearly 14 lakh subscribers, which compares with 8 lakh subscribers that Bharti Airtel added. As I said, for 7 successive months now, Jio has added more subscribers than Bharti. And in this period, Jio has added 1.7 crore subscribers, while Bharti Airtel has added just shy of 50 lakh subscribers. So the margin, the gap between the two is fairly wide. Vodafone Idea, on the other hand, continues to lose subscribers. There's a slide in their market share. In October, they've lost 35 lakh subscribers. In FY23 so far, they've lost 1.5 crore subscribers, with the market share dwindling down to 21.5%. As of October, it's Jio which continues to top the subscriber market share list at close to a 37% market share, followed by Bharti Airtel at nearly 32%, while Vodafone Idea is at 21.5%. But remember, this is a subscriber market share. The revenue market share picture is slightly different, where Bharti Airtel's revenue market share is slightly higher than what you can see compared to the subscriber market share. Just one more word on Vodafone Idea. As we've been saying, 19 successive months that they have seen a decline in their subscriber base. Now, the government equity conversion for Vodafone Idea has also been pending since January of 2022, and this has created a big overhang because the debt on the books is high. As of September, it's 2.2 lakh crores. The finance costs are mounting with the market share declining. The annual interest cost burden is more than 90% of their market capitalization, and there is still no word on the company's 5G plans, while peers like Bharti Airtel and Reliance Jio continue to announce every single day or every week that how they have started providing 5G in some circle, in some network. So in that context, Vodafone Idea is very quickly losing that 5G race as well. So the outlook in that context appears to be a bit uncertain. But that's the latest that we've got from the telecom world. Dipan Mehta, the director of Elixir Equities, is now with us on the show. Dipan, any thoughts on the telecom names? Everyone's watching for when the price hike is going to come through. But your thoughts on the subscriber picture and expectations of a price hike?
Karima, good afternoon and thank you for having me on your show. You hit the nail on the head. I think subscriber growth is all right, but the real alpha will come when they start to increase their pricing. And in a way, it is happening in the kind of plans which these companies are coming out with month after month. You can see that they are inching up in terms of the yield or the ARPU that they can extract from the customer. And it'll be visible in the earnings for December quarter and the later quarters as well. But all I can say is that consolidation is now going to start finally favoring the existing players, and I've always been very positive on Bharti Airtel since it's the only standalone telecom player that you can buy. When you buy Reliance, you're buying into a conglomerate of businesses. But nonetheless, I think telecom is a big part of Reliance Industries as well, and that also could add value to the company per se. But very positive on the news flow, and I think that these businesses have great operating leverage. Demand for data is increasing significantly. I just heard you on the show saying that the number of people who watched the finals that just showed the surge in data. So generally positive on telecom, and Bharti Airtel and Reliance should be part of your core holdings.
Deepan, hi. Just put up two names. One is GIC-RE, which is the reinsurer, the government reinsurer. What a move it's been having. Last 2 days, basically, it's moved up substantially. Let me just tell you. On the 14th of this month, this is basically last Wednesday, right? I mean, 3 sessions back, it was 150 rupees. 190. I mean, just a ferocious move on GIC-RE. The high, of course, is the listing day. I mean, the day of the listing, which is in October of 2017. It made a high of 450 and spent a lot of time around the 120, 130 levels and is now at 190. So that's a big move today, 14%. The other is New India Assurance, which is also, it's a government general insurer, which has also been a huge laggard. But again, I mean, from 90-ish kind of levels, actually even lower, 85 kind of levels where it spent some time, very quickly, in I think a fortnight or so, it's up to 135, 136. Deepan, any thoughts, these two names? Both from the insurance space. Both PSU names, one a general reinsurer, and the other is a general insurer.
Good afternoon, Prashant. I think, this entire theme of investing in PSUs, now that is flowing into insurance companies as well. And I can pretty certainly bet that next few weeks or days, you could see an LIC coming into the limelight. All these insurance companies, they have underperformed big time. And maybe it's partly to do with the fact that their earnings have been extremely volatile. If you see GIC-RE or New India for that matter, there is no single line trajectory of earnings improving quarter after quarter, year after year. And they haven't really created value in terms of sustainable earnings momentum, which is what the street likes to see in companies they want to invest in the long term. But these companies are definitely cheap, perhaps available below their enterprise value or book value, or having also giving very good dividend yields as well. So maybe you are seeing some value buying taking place over there, as we have seen in PSU banks, and we have seen in the PSU defense companies and so many other PSU names as well. So that trend may be playing out over here, and these are typically trading bets. These stocks can easily go by 25, 30% higher from here. But when they start to stagnate, when the bad news starts to come through in terms of their earnings not being up to street expectations, that's when you feel that these companies start to underperform. So I think next few months or quarters looks great for every PSU company. It's like a mean reversion. They were putting so much cheaper, so much well below their averages and compared to other peer group private companies that they're just about playing some catch up over there, and that's where the opportunity is.
Okay, all right. Deepan, I wanted to ask you about a couple of these housing finance companies. Well, we had a big deal last week with regard to Poonawalla, the housing finance arm out there, which got valued at around 3.5 times price to book. But a couple of these other names are buzzing quite a bit. And valuation-wise, they're much cheaper. Indiabulls Housing Finance. The stock is higher even in today's trading session. It's been a rank underperformer, mind you, from the peak. But that's shown some traction in the last 1 month or so. The other one is Canfin Homes, again, which is buzzing. And PNB Housing Finance as well. From the housing finance space, which one do you prefer?
See, Nigel, all the laggards are coming into play over here, because what is happening is that the good quality outstanding businesses are trading at reasonable to slightly higher PE multiples. And instead of buying an HDFC, then investors want to go down the line into Canfin Homes and Indiabulls Finance, and some of the other NBFCs as well. And that's perfectly fine. In fact, when the markets are in a bullish phase or bullish zone as we are just now, typically these weaker businesses, tier 2 companies tend to do much better. The base effect favors them, and there's always a scope for P multiples to get re-rated. And as I said, I think as was the case for the insurance companies, that these are great trading opportunities and investors should take advantage of them. Canfin Homes had been battered completely when the CEO resigned, but there was no adverse development thereafter. So it's just about playing catch up from the extremely low valuations. And mind you, it's a good company. It handled itself really well when there was an NBFC crisis post ILFS. So for all the housing finance companies, I would feel that Canfin Homes can offer a very good return. It's the risk return profile is certainly very positive for Canfin Homes. Indiabulls, I think, has made its move, and yes, it may be a bit more of a trading play over there, but it has had its issues in terms of managing growth and NPAs in the past. So I would have much more comfort going with Canfin Homes. But I think, from a longer term perspective, it gets to be with the larger companies, Bajaj Finance and HDFC per se, which have displayed exceptional growth and created huge value over the past 4 or 5 years or so.
Dipan, thank you very much for joining in. By the way, it's picked up some more for the markets now. We were up 100 points at 230, and now we're up 123 points. Adani Group stocks like Adani Ports, Adani Enterprises at the high point, and Reliance Industries, that's the big boy, which is fighting for the bulls now. Reliance Industries has gained close to about 1%, a sharp surge coming through in the last few minutes. So the picture is vastly different from where we began trade. At the beginning of trade, it appeared to be a very flat, lackluster trade, but now the bulls are in command. On the flip side, fertilizer names are losing ground. They've had a fantastic run, but today names like FACT, from the day's high, it slipped nearly 10%. RCF2 is coming for profit booking. It's under pressure. Welcome back. Still tuned in to Closing Bell. This is turning out to be a good session. 120 points up on the Nifty as we speak. The sensex gaining close to about 350 points. JioCinema has released the viewership numbers for the 2022 FIFA World Cup. Mangalam is here with the highlights. Mangalam.
Well, while we're all talking about how thrilling the match was, the exciting match, etc., and perhaps the greatest football match of FIFA final that we've seen, well, it also means that it was also the most watched football match in India. In fact, the big headline from FIFA finals this time around was that digital viewership has overtaken TV viewership for the first time. 32 million people tuned into JioCinema for the final day of FIFA World Cup, and that's just the final day. In fact, over the entire World Cup duration, there were 110 million viewers. So 11 crore people actually went ahead and consumed the football on digital content. Cumulative reach for the first 58 matches on television was around 47 million. So assuming that they even doubled that number in the second half, digital was far ahead of television itself. India, as a result of this, has actually become one of the highest digital viewership markets for FIFA, an event where it does not even participate. So that's a record of sorts. And as far as business is concerned, advertisers, there were over 50 brands across e-commerce, banking, financial services, auto, fashion, hospitality, fintech, all of them coming in to advertise on these platforms itself. And why just India? Globally as well. We had tweets from global tech leaders. Sundar Pichai tweeted that search, that's Google search, recorded its highest ever traffic in 25 years on the final of FIFA World Cup. He said that it was like the entire world was talking about just one thing. And Elon Musk as well said that 24,400 tweets per second was the frequency at which people were tweeting when France hit that goal itself. So world over, people were talking about it on digital, and India, 3.2 crore viewers on JioCinema apps.
Absolutely, Mangalam. I mean, you and me were contributing as well on the Twitter part of it. So, let's focus on that data point itself. We have Karan Turani of Elara who joins in. Hi, Karan. Good to speak to you. Well, Karan, give us a sense about, this surge in terms of viewership. JioCinema, I mean, I watched it on that platform itself. So what are you making of this? It's a big shift, isn't it?
Hi, Nigel. Definitely, I think this is a very big shift. And, this is for a sport which is not actually, largely followed in India as a market. And India does not even play in the FIFA World Cup, right? So this just go to show the kind of traction we're going to see for digital media. I mean, we have got IPL next year, which is going to come, and that is going to Jio as well. I think digital media is definitely growing at a very faster clip. It's growing at close to 2.5, 3 times as compared to the TV medium in terms of ad revenue.
Is there a case then that we have to start paying more for consuming OTT platforms, for watching things digitally? And you've also come up with that a lot of broadcasters have submitted their bouquet package prices. I think the deadline was 31st of December. Take us through the latest on that.
Yeah, so firstly, in terms of the digital pay, I think ARPUs remain to be very low in a market like India because it's highly price sensitive. And if you look at the TV medium, the ARPUs are very low there. So just to give you a comparison, you can view close to 700 channels for an ARPU of 350 rupees, 400 rupees per month on TV. And, for subscribing to, say, top 5, top 7 OTT platforms, you need to shell out around 1,200 rupees, excluding the data cost, which is there. So I think OTT still right now, is an expensive proposition. It's not being able to scale up in terms of number of paid subscribers. Churn rate is very high. Market is fairly fragmented. So I think still some time, when ARPUs really move up in a market like India. Until now, I think they will be very low, and it will be more led by telecom bundles and a lot of partnerships between the platforms which are there. As far as TV is concerned, this reorder which is coming clearly is that they've kind of raised the price hikes over here, and this is something which is much awaited since the last 2.5 years. Broadcasters are wanting to increase the price on the TV medium. But because of whatever court cases, because of NTO 2.2 uncertainty, they haven't been able to do that. And the recent, submissions that have been done by some of the large broadcasters like C and Sun TV, there is a 10 to 11% revision in terms of the bouquet prices. So I think the price hikes are slightly ahead of our expectations. We were expecting a price hike of almost about 8 odd percent, but they are slightly ahead. But nonetheless, I think a price hike beyond this will some way kind of have a negative impact in terms of the overall TV viewership base. Because if you look at the TV medium as a whole, they are facing stiff competition, in terms of eyeballs, time spent from the digital media.
But Karan, since the price hike is more than expected, it'll have a positive rub-off, right, on the revenues for broadcasters. Have you penciled in some kind of a matrix?
Yeah, so if you look at the subscription revenue, I think in terms of overall broader revenue contribution, it's anywhere in the range of 40 to 60%. And if you look at the subscription revenue pie as a whole, it was not growing more than 4 to 5% in the last 3 to 4 years on a CAGR basis. And the primary reason for that is that, in terms of overall growth rate for TV subscription revenue, there is only one lever like price hike. Because if you look at the TV household, that growth rate is fairly muted because we are almost about 65 to 70% penetration levels today on TV. So I think broadly, this could have a revenue upgrade of anywhere close to 4 to 5%, and it could also have a positive impact in terms of earnings, anywhere in the range of 7 to 8% as we speak.
Karan, we leave it there, but this is I'm assuming a conversation we'll continue having as this medium of consuming content gains more and more promise and viewership. Thanks very much for that. Now, Gopal Agarwal is joining us. He's Senior Fund Manager of HDFC Asset Management Company. Gopal, pleasure to have you with us here on CNBC TV18. Good afternoon.
Good afternoon.
The market towards the end of last week looked like it was kind of hesitating. But as we come out this new week, no problems, looking pretty solid. Your sense, Gopal, lots of mutual fund managers we've had on the program over the last 2 weeks or so have sounded more or less cautious about prospects in the near term because of the run-up that we've had, valuations, etc. What's your house view?
So I would like to share my thoughts on the market particularly. At this juncture, I really feel macro stability in India is quite strong. And, there are really banking and financial sector looks very, very interesting. There are really, not much issue except the valuation in the near term has gone up. And we are seeing incrementally the growth slowdown into the Western world. And also the even China is going through yo-yo in terms of opening or, shutting down. So definitely external pressures are there while the domestic news is quite positive. So I would say there will be tug of war till the next earnings season. So the market would like to, trade within a band until unless the next quarterly result season, which will really give the direction to the market.
The fact that India's macros will appear resilient is only in the case if there is a shallow recession in US and EU, right? That's when India's growth of 6-7% will start looking very impressive. But what happens if the US markets and the European region go into a deeper recession? Then what is the base case for our markets? Would you then advise people, remove money out of the equity markets? Are we in for a bigger downturn?
So if you look at our market per se, we have almost 50% earning comes from the local earning and 50% earnings is linked with the global side actually. So our market is well balanced between the two. I would really say that, our earning impact will be quite less because this time, this balance sheet of individuals and corporation, both in US and Europe, is far, far better than 2008 or 2014. So definitely this time, I really feel a very chance of a very shallow recession because of the very strong balance sheet, actually. So there will be certainly slowdown, which we are penciling in. That is why, the growth GDP expectation from 6.8% is likely to be between 6.1 to 6.2% next fiscal in India. So definitely return expectations should be moderated after a great stellar rally in the market. But I would still argue that equities are well positioned if we use a staggered approach.
Hi, Gopal. Good time to get you, actually. You're sounding pretty optimistic. You're brushing aside the near-term challenges, maybe in terms of valuation or in earnings, but you're sounding more constructive on the markets. And as you mentioned at the start of this conversation, BFSI is something that still could look good from here on. How much of the good news is in the price? And if you're looking at BFSI, what would it be? The large private sector banks, but the PSU banking names have been the ones that have given you big returns. So would you allocate some money out there?
So certainly, I would like to have a balanced approach at this point of time. Very clearly, Nigel, what we are really seeing that loan growth is quite strong in India, is close to 17-18%. And at this juncture, the NPAs or the credit or the slippage is also at a you can say decadal low at this point of time. So there is a room for catch up even for the the public sector bank or the NBFC at this point of time. So definitely a balanced approach is the right approach. On a whole, I would say that BFSI space is trading close to 7% discount to the long-term averages. So you can see still there is a room of safety in the valuation of banking sector at this point of time.
Gopal, PSUs as a theme, not just PSU banks. I mean, I was looking at moves in names like GIC, RE, New India Assurance. Is there anything? I mean, I don't know if you have any thoughts specifically on these PSU insurance names, if you own them. One common thing between both, one is a reinsurer, the other is a general insurer, is that both have done very poorly since listing and off quite a bit from the highs. Any thoughts at all? Or is this just, market trying to squeeze out the last one in terms of gains? Hunting for underperformers, big underperformers, and bidding them up? Or is there something going on? Yeah.
So in general, in insurance sector, what has happened in the past, this, we had a great rally, but in the last 18 months, because of high COVID claim and the loss ratios were higher, so it has resulted in, suppressed profitability and ROEV. So I expect it can normalize. So it gives us a trade. But structurally, still in India, this space is not very attractive. So, but definitely from a lower level, there can be some earning upside in the near term. So that's my short term, you can say tactical call you may have at this sector.
Where is it that the risk reward is most attractive according to you? Your top 3 sectoral bets or individual names, if you could help us with that.
So generally, I am constructive on banking and financial space, where I am taking quite a lot of weight in my portfolio. Second, I am very positive on engineering and manufacturing, even after a stellar rally of the last 2 years, because what happened, they generally support to the companies which are unlevered, and they really support to the manufacturing sector, which in my view, with the help of PLI and new wave of investment into steel, cement and refining, so they are well positioned at this point of time. That is my second sectoral overweight in my portfolio. Third, I am running contrarian slight overweight at this juncture into the auto sector, because I feel running into the election in 2024, rural spending should pick up from here, and we are in a benign commodity price environment. So that's my top 3 sectors in the portfolio.
All right, Gopal. So if you're positive on autos and if you're saying rural consumption is going to come back, then what do you play? Tractors or two-wheelers?
Certainly, I have a combination of the both, and also, we can see that some of these auto hanks should also benefit, because not only from the rural India, and also they will benefit from, the EV penetration.
Gopal, it's been good hearing your thoughts. Thanks so much for stopping by. Well, I don't know whether we'll get to chat in this year itself, but it's been good hearing your thoughts and looking forward to chatting up with you in 2023 as well. Have a good end of the year. Well, it's that time of the day then where we get in Nimesh, because he'll give us a bit of an insight into what's going on in dealing rooms and help us to decode. Well, Nimesh, at the start of today, people were wondering whether or not we're going to see a bit of a downtake. But that dip has got bought into. Maybe participation is not that much. But tell us more. What are you picking up?
So you're right, Nigel. The participation is on the lower side. So volumes will get impacted for the next few days until the end of the year. That's given, because of the lack of FI participation, and that's been the case today as well. I guess, the only worry is, while this pullback is largely, it looks like it's more of a short covering rally, because we saw a bit of correction last week, and we're seeing a bounce back from those levels. So looked like last week was a little oversold, and we're seeing a bit of a recovery in today's trade. Some of those mid caps, large caps are also buzzing in trade. I guess the bigger worry is the quality of small cap and mid cap. Now it looks like investors are looking at down the curve, very small, very micro cap companies. That sometimes give you a bit of a warning sign. So not yet. I mean, not like it's like a blowout kind of a rally in the mid cap and small cap. But there are initial signs of some bit of euphoria in those spaces. That's something one needs to watch out for. I guess from a sector point of view, again, the financials are well bid, so that space seems to be well bid from the large institutions, and there is a bit of profit booking in the IT name. So IT as a sector looks like the pain is not yet out, and you're going to see, I guess, the focus will be back once the Q3 earnings starts coming in. So that's when I guess people will look at IT. But now it looks like there is a bit of profit booking in the IT names, and as I said, financial seems to be the sector where everybody seems to be hiding on. So that's the space to watch out for. But as I said, the volumes are going to be on the lower side, but the quality of mid cap rally is something one need to focus on and be a little worried about.
Be a little bit selective and look at the at the pedigree of the companies as well from the broader markets that are moving up. But Nimesh, let's get stock specific then. What are you picking up with regard to stocks?
So in terms of individual names, the first stock on my radar today is M&M. The entire auto pack has seen a bit of a pullback, and M&M stands out today purely on back of strong buying interest. So the delivery volumes are going to be quite high, and that's the space where those stocks have outperformed, and you're seeing periodically at lower levels buying comes in. So M&M stands out today largely on back of buying interest. The second stock is DFM Foods. The last day of tendering in the delisting offer is today, so that's the reason why I've opted for this particular stock. Nobody highlighted since morning. So that's one stock largely on the delisting offer closing today. It's part of my list. The third stock is Poonawalla Finance. After the announcement, surprisingly, the stock is under pressure. In fact, this month, the stock is down 7-odd%. Last week, we saw the big announcement of selling the housing finance business. Now I understand there's going to be a large block, and the erstwhile promoter of the company is likely to sell in the block deal. So maybe that's something investors are watching out for very closely. That's why Poonawalla Finance is under focus today. And the last stock is Sterling and Wilson. Again, there I understand there's going to be an offer for sale very soon. And in fact, if you look at the shareholding pattern, the combined holding is more than 75%. So that has to bring down. So 2-odd% stake could be sold from the promoter entities, the erstwhile promoters. They will sell some stake in the OFS. That's the overall feedback, and hence that stock is under pressure today.
Okay. All right, Nimesh, thanks a lot for that. Well, back to you guys in the studio.
Okay, we need to slip into a very short break, but on the other side, we'll tell you what you can buy today and sell tomorrow. BTST calls coming in from Mitesh Thakkar.
Okay, welcome back. We'll just quickly run you through the market picture, which is looking better and better, 150 points. I think if you can have Reliance intraday up, it'll probably explain the last bit of surge. Reliance is now contributing almost 30 index points to the Nifty single-handedly. So that is quite something. And you can see the surge post 230, post when we started this show. So a full 150 odd points coming through on Reliance. I don't know if ONGC is seeing a similar move, a delayed reaction perhaps. Both of them did well on Friday when that windfall tax cut came, but then they slumped. Nothing on ONGC. That's down 0.75% still. Mitesh is with us to tell you what to do now, what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I have two buy-side calls. I have a BTST, HDFC, AMC, and amongst the auto pack, it's Hero Motors. So that's the two calls which I have. On Hero Motors, I would recommend a BTST with a stop just below levels of 27.65 and a target of around 28.10, 24 tomorrow. while HDFC AMC, a BTST with a stock below levels of 22.75 for targets of 23.20.
Okay. Those are the trades that Mitesh is recommending. Tata Investment says they're not aware of any potential information with respect to a state buy in UTI AMC. These reports were doing the rounds. UTI AMC, as you can see, the share price has surged close to about 11% on the back of this report or rumors that Tata Investment would be interested in acquiring some stake. But Tata Investment is pretty much saying that we're not looking to buy that stake. But let's quickly get you a programming note. Today on Wizards of Dalal Street, Ramesh Damani will be in conversation with Sri Datta Bhanwaldar, the head of equities at Canara Robeco Mutual Fund. Sri Datta has been associated with Canara Robeco for the past 6 years. He's currently in charge of all equity funds at the company. He manages over $5 billion across funds and has delivered a CAGR of 35%, following a philosophy of holding selective quality stocks in the portfolio to create wealth through compounding over the medium term. You can catch the entire interview at 3:30 p.m. today. Okay, let's just turn our attention away from the secondary markets and talk about the primary markets. KFin Technology IPO has opened for subscription today till the 21st. It's a 1,500 crore rupee issue, but this is purely an offer for sale. The promoter entity, General Atlantic, will be selling their stake in this offer for sale. They had more than a 50% stake, but post what they will be selling, why this offer for sale of 1,500 crore rupees, they will still be left with close to about 29%. So let's quickly hear out what the management of KFin Tech, its business model is very similar to CAMS, the other listed entity, but they also have some international presence. So quickly listen into what the management had to say about their business model, the margin outlook, and the way forward.
We have seen market share gains from about 26% to 35% in the case of equity. Okay. We have seen a SIP market share increasing close to 42%. So we've been range bound, 40 to 45% in the past, right? And we'd like to believe that anything beyond that, if we could accomplish, we would love to plow back in terms of additional, modes for creation for the future. International for the period ending September was about 13%, right? And we have made certain acquisitions, not just managing the investor solutions, but also for fund accounting and administration, which also has international presence. We'd like to believe that, over time, we will be present not just in Southeast Asia, but, hopefully in the US and European markets as well. And we want to orchestrate a revenue pool of probably about 20% in the near term in terms of the overall pool, even as it expands.
That's KFin Technologies for you. Mayuresh Joshi, William O'Neill is with us on the show now. Mayuresh, afternoon. What explains this last hour surge in Reliance Industries? Have you heard anything and your thoughts?
Afternoon, Rima. not that I've heard anything, but 2-3 things probably happening in favor for the behemoth. One, in terms of the windfall taxes coming off, I think it did not anyway significantly impact it out of the Jamnagar plant as well. But I think that's a sentimental positive as well. The second element that we are probably looking at tracking is the GRM prices itself. And GRMs have definitely inched higher from the lows that they hit a few months ago. So with increased refining margins expected to come through quite significantly in the quarter and the quarter after that, I think earnings growth should start picking up on this leg or this segment of their overall consolidated earnings. When it comes to Jio and retail, Rima, I think the numbers that you're probably seeing in terms of subscriber additions, I was seeing your bites on that. Significant additions happening at the expense of Vodafone Idea. But ARPUs have also shown an upward trajectory and will keep on doing so, which basically means with a very low leverage balance sheet on Jio, the exponential cash flows can be strong. On the retail front itself, the expectations in terms of improvement in margins, pouring into FMCG as well with their own independent brands, I think there is a huge addressable market size out there as well. So I think all the three components that Reliance basically operates out of is probably moving in the right direction. Q3 numbers should be relatively better, and so should Q4. So I think the Street is probably taking positive cues on positive expected earning growth in the next few quarters.
Hi, Mayuresh. Good afternoon. Are you traveling for the vacations? Are you going to any airports or are you flying somewhere?
No, so I'm not flying, but I stay very close to the airports. I can see the buzz around here.
So, okay, so let's talk about a couple of those stocks then. You have GMR Airports. Well, that's up for close to 3.5% in trade. Interglobe Aviation as well is doing pretty well, up 3.5%. So those are relatively outperforming what some of the other mid-cap stocks are doing. Any view on any of these two names at these prices?
So after Nigel, in the first place, I think travel is booming. So I think what you've been seeing in the past couple of quarters since the unlock trade has begun in real earnest, hotel bookings have been through the roof in the past few quarters. This quarter probably gone best quarters for the hotel industry as a whole. So I think if you need to go to hotels at different destinations, you definitely need to travel. So I think the buzz at the airports that you're probably seeing, both domestic and international travel as well, the expectations in terms of crude prices coming off. I think ATFs are a significant component of aviation companies as well. And as they start coming off, the relative EBITDA will be seemingly better as well. So yes, I think there is a sentimental trade attached to these companies as well. But have a look, in our opinion, on our buy watch list at VIP Industries. Because if you need to travel, you need to carry luggage as well. The company has obviously seen the brunt in terms of input cost inflation in the previous two quarters. The best part about their input cost is 65 to 70% is related to crude and crude derivatives. With prices coming off significantly, Nigel, on this front, the expectations in terms of margin expansion Q3 onward seems to be substantial. Both hard luggage as well as backpacks seems to be making a huge comeback. The finished goods from China, the dependency thereof is less than 10% at this point of time. The earnings growth and specifically the gross margin performance because of these factors expected to improve. Cash-rich balance sheet, which basically means that the incremental operating leverage plays very, very effectively in terms of ROEs and ROCEs. So yes, I think with the aviation companies and the airports, sentimental trade attached, but something more structural in terms of earnings growth. VIP Industries, on the RS rating on the only lens, it's a little bit weak at this point of time. So I think conditionally, if it crosses 350, 360 odd, where there's a lot of supply, my own sense is that there can be strong momentum on this.
You know, I was talking about the two insurers, right? GIC, RE and New India. Check out LIC as well. That is the other one, which is jumping 6.5%, 7%. So this is I don't know what to call it, rally of the underperforming PSU insurance names, because all three are jumping as we speak. LIC up 6-7%, and the other two much more. Mayuresh, any thoughts on this pack?
7%. No, I think it's more a sense in terms of the beaten down valuations and beaten down price strength that these stocks had exhibited. Now, a lot of the PSU stocks had showed significant momentum and traction, PSU banks specifically. I think a catch-up trade of sorts, specifically on the non-life players, because they're showing significant traction happening at this point of time. Not really sure whether the street is sensing any sense in terms of regulatory tweaks, whether there is further capital infusion coming in from the government at this point of time, or any change in the rules thereof. But largely, I think it's more a sectoral churn that is probably happening at this point of time on the other public sector enterprises, which have probably not performed.
You were talking about VIP and how that's looking attractive to you given the current dynamics. What about Safari? That's also, it's a similar play compared to VIP. Do you like it? What's the big difference between VIP as well as Safari?
I think not much to distinguish, very frankly. I think if you look at the luggage industry, DMA itself, Safari, VIP, and Samsonite, obviously it's not a listed player in India, but I think they've got a major lion's share when it comes to the organized luggage or the handbag market in India itself. Now, the unorganized market is pretty large even at this point of time. So I think all these three players have substantial scope with the capacities that they have got at this point of time to probably utilize it to the fullest and probably garner a lot from the unorganized market itself. Obviously, I think the tailwinds that follow for all these companies with lower crude coming through, input cost basically going down significantly, and demand expected to persist, acts as strong tailwinds. One more factor to be added, Rima, surprisingly within the space itself, is around 32 lakh weddings are expected. A major source of their sales also comes through in terms of storage of luggage when it comes to household items as well. So I think that's one major source when luggage and the marriage season probably provides that as well. The only difference that I see for Safari is probably low liquidity at this point of time, which probably has a lot of beta component in terms of price point. Valuation-wise, not much to distinguish again, but I think VIP relatively stands out to be a more safer play, both in terms of market leadership, in terms of the institution holding and probably satisfying a lot of parameters on the O'Neill lens.
And yes, Safari is up 92%, while VIP has gained 26-27%. So Safari has actually outperformed VIP. Do stay on, Mayuresh. We need to slip into a very short break. We'll come back and get you the market closing comments as well and some more market talk.
Welcome back. Well, Monday started off on the front note actually for the bulls. On the front foot actually, we have the markets that are moving to the high point of the day. Adani Enterprises, just take a look at that stock. That's spiking up as we speak. Kotak Mahindra Bank as well is doing pretty well. And the Nifty Bank, remember, that's held on to the 20 DMA. It seems like it's good for more. It's relative underperformer in comparison to the Nifty. But Kotak Mahindra Bank has moved to the high point of the day as we speak. Well, Mayuresh Joshi as well is still with us. Mayuresh, you know, earlier today we covered this company, Minda Corp. I'm not sure whether or not you've tracked it. Uno Minda is the more popular one, which gets the premium multiples. Minda Corp is, the other company that really doesn't get a premium multiple. But the management sounded quite positive on the outlook. They said that they're going to outgrow the market from here on. Margins will be in the vicinity of around 11 to around 12%. And the EV part of their business, they'll see it scaling up. It trades at around 17 to around 18 times odd. Have you had a look at it?
Not really, Nigel, in the recent past. But a few of these auto bank companies do seem interesting because of the entire EV portfolio that they are possessing at this point of time. And the kind of investments on the capability building processes that they're probably making for this entire ecosystem as well. Case in point being Gabriel, as we discussed last week as well, but that's significantly moved away from pivot. So one really needs to wait for pullbacks. But something like a FM Industries is also something that remains on our buy watch list. Interesting aspects happening here as well. I think on the EV portfolio, they're building up quite a few interesting products. The margin stability has been quite robust over the past few quarters. With the input costs expected to go down, the entire sense is that margin expansion should be very evident and obvious in the next few quarters as well. Not too much of leverage on the balance sheet as well at this point of time. And the kind of orders or the customer wins that they're probably having, both existing and prospective ones as well, that probably keeps their revenue visibility intact going forward as well. So frankly, not had a look at Minda Corp in the recent past, but a few of these companies like Gabriel or Pullbacks or FM Industries do remain on.
That's the call on the auto ancillary space. Specialty restaurants is another big mover. It's up 15%. The company's announced that on 21st, that's Wednesday, they will have a board meeting where they will consider some fundraise. So ahead of that, the stock is excited. This year, it's up 155%. Mitesh is still with us. Mitesh, in the morning, you were telling us that how if the Nifty crosses 18,400, you would explore some put options. You would look to go short in that way. What's the call now? Have you changed your mind or have you taken some fresh puts?
No, we have taken some put options and the stop loss for the same position is about 18,485. So about 60 points here from here. And I think, very clearly good bounce back, but I would still want to see it get past 18,440, 450 zone before, you feel that this bounce back could possibly extend into something bigger. So waiting out for that. But as of now, I think from this point of view, the risk is much lower compared to the, risk of shorting at 18,300 or today's opening. And therefore, I think this trade still makes some kind of a sense.
We'll leave it there. Thanks very much. Appreciate you joining in with that perspective this afternoon. Well, 3 minutes to go for market closing, and it's 160 points. But 80 of the 160 points, 50% of the gains are five names once again. It's Reliance, HDFC Limited, ITC, Bharti, and Lever. So these five names with 50% of the 160 point gain that you had and you saw on the index. Bank Nifty, of course, not as strong as the Nifty. Nifty was up 0.9% percentage terms. Bank Nifty ends with about a 0.5% gain. And let's just look at the mid-cap and small-cap indices as well. Mid-cap index 0.6, and I think you've got the small-cap index, which ends up, 0.5% as well. Not at the day's high, the small-cap index off the highs of the day. Just some other kind of losers. I mean, there are actually only two or three. The two obvious ones are tech names. Both Infosys and TCS were down 0.75%, 1% in that range. And you had Tata Motors, which actually was down by a little bit as well, but far and few in between. As far as overall market breadth goes, I mean, it's more democratic. 1,300 stocks are higher, 900 are lower. But I have to say, the volume-led gains are all on the winning side. On the downside, there are a few names, but volumes really with what was higher and running away. Rima.
Well, mid-cap index up 0.5%. The advanced decline ratio, 3 stocks in the green for 2 in the red. But for another day, the mid-caps have trailed the frontliners. They've underperformed. The big winners are in the sugar space yet again. Simbhaoli Sugars locked in an upper circuit of 20%. But KCP, Kothari, Rana Sugars, Shakti Sugars, all these stocks saw double-digit up moves. A couple of these, mid-cap commodity name stocks like Lloyd Steel, Sunflag Iron saw some very smart up move. GIC Housing gained in trade. New India Assurance, pull up that insurance stock, and you would see some big rally coming through. That's up close to about 12%. On the losing side, fertilizer names came in for profit booking. Madras Fert was down nearly 5%. RCF slipped nearly 4%. It's a mixed bag for the banking space. You had some softness coming through on Central Bank of India, but on the flip side, CSB Bank, that's Catholic Syrian Bank, was higher in trade. There goes the closing bell. The Nifty finally ends with a gain of 160 points, a surprise up move coming through in the second half of the trading session. We started flat, but we picked up steam through the course of the day and finally ending in the high point. The sensex up close to about 450 points. Some other movers include specialty restaurants in the back of their impending fundraise and UTI AMC. Though Tata Investment has said they are not aware of any investment plans in Tata UTI AMC, the stock still rallied in trade. With that, it's a wrap and closing bell, but don't go anywhere. Our Monday special, Wizards of Street, comes up next.